Hello investors, it's Zil from Equitymaster, bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. Today, we are going to talk about a railway stock that has started showing signs of momentum. It's none other than IRCTC. You see, it's the holiday season and most people decide to go on a mini vacation during this period. Now, the first thing that pops into your mind when planning a trip is booking Tatkal tickets on IRCTC. After all, railway is the most budget-friendly way to reach your destination. And that's not just your sentiment. This is what every traveler believes. Hence, IRCTC's website is the most highly transacted website in the Asia-Pacific region with more than 34.5 million transactions per month and 6.27 million logins per day. In 2022, an average of over 1.1 million tickets were booked daily through IRCTC's website and mobile app. It's no surprise that IRCTC has hailed the mini Ratna of railway sector. Recently, shares of IRCTC have gained momentum owing to multiple tailwinds finally coming in favor of the company. In this video, we'll discuss the reasons fueling this upward surge and whether it will last. Please note, this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Coming back to the reasons why IRCTC share price is rising. We all know that IRCTC generates majority of its revenue from its primary business of e-ticketing. Apart from this, the company is engaged in catering, travel and tourism, and packaged drinking water. Now, to expand its business further, the company has announced its plans to become a premier brand in hospitality and catering in India. The company is looking to broaden its catering operations across India and is in discussions with various government organizations and industrial houses to set up catering units. IRCTC has signed Memorandum of Understanding with government and autonomous bodies, including defense establishments like the Border Security Force, Indian Maritime University in Kolkata, and Cotton University in Guwahati. IRCTC is also actively commissioning 15 more catering units across the country in the near future. All of this will help IRCTC to broaden its revenue streams beyond the e-ticketing space. More so, investors are optimistic about the company's future and hence the company is on the upward trajectory. The other reasons why IRCTC shares are rising is because the government recently announced to acquire new trains. You see, the passenger traffic is increasing as years are passing by. Hence, it is important for railways to expand its capacity as well. Keeping that as a focus, railways have announced plans to acquire new trains at an estimated capex of Rs 1 trillion over the coming years. This capital will be used to replace old trains with about 7,000 to 8,000 new ones. To make this happen, the government will invite companies to bid for the job of building these new trains. The process will start in the next 4 to 5 years, and once a company is chosen, they will have around 15 years to deliver the new trains. The aim of this move is to increase availability of trains and the number of trips. Now, at first glance, the move will benefit other railway ancillary companies like Titagarh Wagon and Texmaco Rail, which are involved in manufacturing wagons and coaches. However, in the long run, IRCTC will stand to benefit too. With the addition of new trains and number of trips, the overall capacity of the railway network is expected to increase. This can result in more travelers using IRCTC services for e-ticketing, catering, and tourism-related offerings. Moreover, the long-term nature of the train procurement plan provides IRCTC with a stable and extended period to plan its services and offerings in alignment with the increasing needs of passengers. Now let's take a look at IRCTC's financials. When it comes to railway tickets, the only company we hear of is IRCTC, because it is the only entity that is authorized by the Indian Railways to offer railway tickets online, run catering services, and sell bottled waters across all railway stations and trains in India. Basically, IRCTC is a monopoly business. And if there's one thing investors love, is investing in a monopoly business. In September 2023 quarter, the company reported robust financial performance. Its revenue from operations grew 23% to Rs 9.9 billion compared to Rs 8 billion recorded during the same quarter last year. On a sequential basis, the profit after tax grew 27%. The growth can be attributed to the spike seen in its tourism business, which saw a revenue surge of 39% in the September quarter as compared to the same period last year. The catering segment was the second major contributor, with revenue soaring by 29% in the quarter under review as compared to the same period last year. Moreover, the company also recently announced a tie-up with Zomato for catering services, starting with a pilot agreement. The management believes that the volume and earning patterns from this agreement will be clearer in the next quarter. Revenue from its e-ticketing space recorded a 9% increase to Rs 3.3 billion, and packaged bottled water segment recorded a 4% increase year-on-year. The management also mentioned that the company has added 11 pairs of Vande Bharat trains and 18 new static catering units, which will drive growth going forward. While all this seems rosy, what could investors expect from the company in 2024? IRCTC generates a majority of its revenue from its ticketing segment, especially online ticketing. The company believes that with the rise in number of internet users, this segment will see multifold growth by 2025. Similar is the case with digital payments. As more potential customers choose digital payment methods, the company's e-ticketing business will expand. In the September quarter, 38% of tickets were booked using UPI, which shows an increasing trend in digital transactions. Apart from this, IRCTC wants to create a one-stop platform for all train-related services for passengers. To achieve this, they plan to enhance their IT capabilities and collaborate with industry partners to use advanced technologies like artificial intelligence and machine learning. They aim to move from traditional systems to more flexible and cost-effective public cloud platforms in the next 2 years. This shift will allow them to integrate cutting-edge technology and provide personalized services to customers. All in all, IRCTC's robust financials offer net safety somehow. In the last 5 years, the company's net profit has grown at a CAGR of 24%. The company's return ratios have also been robust. The return on capital has jumped from 39.7% in 2018 to 53.9% in 2022, while the return on equity expanded from 25.5% to 40% as a result. The company has healthy cash flow from operations which support its growth plans. It is also debt-free. With all these tailwinds at play, IRCTC is surely a stock to add to your 2024 watch list. That's it for today. We hope you liked this video and it provided you some valuable insights. Have a profitable day and happy investing.